Hello. Good morning, everyone. This is Kathy with BK Traders of Monday Market Buzz. If you can hear my voice and see my camera, please say hello. Hello, good morning, that you can hear me and that everything is working like it should be. Let me know that my visual as well as my audio is coming through, and just say good morning. Good morning, Park, Fran, Andy, Cheryl, Samir. Thank you all for joining me this morning. It's going to be another very interesting week in the markets. So, we're going to talk about all of that. But I do want to start by making sure that everything is working fine. And I'm just going to share my screen in a second, if you will bear with me. My friends on X, you can also say hello. Good morning. All right, so let me go ahead and share my screen. So right now you should be seeing my fundamental heat map. So let me just change my audio. Oops, that's not what I want to do, to make sure it's coming through the right microphone. Stereo, okay. I think everything should be coming through. Good morning for Bolivia. Where are the rest of you coming from? Europe, the Netherlands, any of our Australians here this morning joining us for our weekly live stream. There's so much to talk about, so much that's going on in the markets. It is the quarter end. So I want to talk about that as well. I want to talk about what it means. Just, it's good to know because many of you may not know what it means to have a quarter end. So we are going to talk about that. Hello, Keith. Keith, we're going to be in Melbourne at the later this month, and we're trying to think about, putting together a meetup at a pub or something. So I'll let you know if that's happening. I know, Keith, you're one of our BK members, so you will know if that's happening. And it would be great to meet some of you in Australia face to face. Both Boris and I will be out there later. Not this month. This month is over, right? This month, today is the last day of September, the last day of the quarter. I meant October is when we're going to be in Melbourne. All right, so let's start by saying that today is the month end, the quarter end, and in many ways, it's important. Now, some of the movement that is usually in anticipation of quarter end may have happened already, but that may not necessarily be the case this month. And the reason for that is, first off, the reason why month end and quarter end is so important, and maybe some of you would have already seen my tweet about this, is that there's a couple of things that happen at the end of a quarter. If you think about it, a lot of businesses, American businesses, publish quarterly results, right? A lot of funds, they publish, hedge funds, money managers, they publish their quarterly performance. And usually it's closed performance, not floating performance. So at the end of the quarter, and today's kind of their last opportunity, this is their opportunity for quarter end profit taking for the businesses. If they are making, for the funds and the traders who've made profits, they want to show positive quarterly results. This is their opportunity to show those quarterly results, to show, to basically either take profits ahead of the end of the quarter, so they can show those results. Also, I talked about how at the end of the quarter, a lot of businesses will report their earnings as a result of what their earnings looked like in the third quarter and the second quarter. So we could also see, quarter end hedges, quarter end profit taking, and window dressing by many of these corporates as well as fund managers. On top of that, you have the potential for strategic positioning for the next quarter. But the most interesting one, and the one that really, the only one that we can really handicap and anticipate, is something called quarter end rebalancing. And quarter end rebalancing is very important. Quarter end rebalancing is something that basically, relates to how whatever movement we had in the previous month. If you think about it, some of these fund managers, they want to have, in their mandate, 70% exposure in their overall portfolio, maybe to US equities, maybe 15% exposure to European equities, and 15% exposure to Asian equities. Let's just imagine that scenario. So if they are mandated to have this type of exposure, if you think about it, when you have a month, a quarter, where we have US stocks, as you see in my chart here, let's take a look at where the beginning of the quarter is, July, where US stocks basically hit an all-time high and significantly higher than where it started the second quarter at. Then when we have this quarter end rebalancing, I want you to take a guess. What do you think needs to happen if they are mandated only to have 70%, let's say, of their portfolio in US stocks, and the value of their US stocks hit record highs, and maybe the value of their Asian and European stocks did not keep up pace? What does that mean? That means that maybe the 70% of their US holdings is now worth 75% or 80%. But in order to get back to their mandate of 70%, there's a lot of funds like this, 70% US equities, what they would have to do is they would just have to sell, right? They have to sell their US equities in order to get back to this perfect mix of portfolios that they've promised their traders or their investors. And that is one of the main reasons why stock futures, and you see on my right-hand side, are down today. And today we actually have a risk-on day. Currencies are up for the most part. US yields are up really nicely, but stock futures are down. And stock futures are down, gold prices are down because gold prices also hit a record high. So a lot of these instruments are lower, and they're lower because in order to meet the quarter end rebalancing flows, what needs to happen this quarter is that traders need to sell stocks, trader needs to sell gold. And what about the US dollar? Let's take a look at the US dollar. Taking a look at the dollar index, you can see that the dollar index on a monthly chart dropped, pretty much this is where July began. So July began right here, and we are right here. So, clearly the dollar has had a rough month. So the dollar's fallen quite a bit in the third quarter. So the dollar's fallen quite a bit in the third quarter. So for no purposes other than, rebalancing flows, hedging flows, profit taking by funds for the end of the quarter, what, kind of seeing a little bit now, particularly against the Japanese yen, is you're seeing, people take profits. Now, there's an argument that, this begins obviously before the quarter officially ends, because they don't want to do everything on Monday, for example, right? Because, and some of them do, maybe, a lot of them maybe don't even care. And that's really the important thing to remember, is that when it comes to corporates, a lot of times they don't even care what the price that they hedged at. They care more about the date they've hedged at. Or the approximation of the price. Like they rather hedge euro dollar at 112 even, for example, than 112.15. So quarter end rebalancing flows today is negative for stocks, negative for gold, and positive for the US dollar. And that kind of explains, that's kind of what, just kind of a little bit of a quarter end rebalancing 101 for you this morning, to explain to you why so many people pay attention to the quarter end. Now, month end is also kind of important sometimes when we have option expirations around the end of the quarter. That's also interesting. But in general, this is why people talk about quarter end rebalancing and why the end of the quarter is so important. So hopefully you've learned a little bit about that this morning. So let's talk about this week. Clearly, we are going into the week with US dollar trading weaker for the most part. I mean, if you look at some of the levels, the Australian dollar rose to its strongest level since February 2023. Sterling rose to its strongest level, not this today, but this month or last week. It rose to its strongest level since March 2022. And it is up today, but it did not recapture the previous highs. And this kind of looks like, I would say, a reversal candle to me. But still, the Australian dollar is very strong. The New Zealand dollar also very new highs, definitely new year-to-date highs for New Zealand dollar. And this is the highest level for the New Zealand dollar since July also of 2023. The other major currencies aren't seeing new highs, like euro is just kind of hovering, although it is also like sterling hovering at its highest level since July of last year. Dollar yen is not a significant level. Dollar Swiss is also not a significant level, and dollar CAD is not a significant level. But overall, the US dollar, for the most part, is starting the new week still on its back foot. And there are really good reasons for that, because every single week in the beginning of the week, we talk about, what to anticipate for the rest of the week. And I'm neutral dollars this week, but I think there's a lot of reasons why. And the reason why I'm neutral dollars is because the dollar is kind of a little oversold. It's gone down quite a bit. Now, I still believe that the path of least resistance for the dollar is lower, but I do believe also that the dollar itself is oversold. This week we have non-farm payrolls. And before we get into that, last week, we ended the week with personal income, personal spending, and PCE deflator. So, the dollar sold off. If you go back to the charts, you will see that the dollar sold off sharply on Friday, mostly against the Japanese yen. It also, kind of sold off against the euro, but not so much, but mostly against the Japanese yen. And the reason why it sold off on Friday is because we had those weaker personal income, personal spending, PCE deflators. So everyone was kind of bracing for a weaker dollar, a weaker economy, a weaker jobs report. And, that's kind of what we're looking at for this week, because the most important piece of data on this week's calendar is indeed going to be Friday's jobs report. Friday's jobs report from the U.S. Because in many ways, I would even argue that the jobs report now is more important than the inflation data. Although the inflation data is always important. Why is my mouse always hitting against the table? I can't give you an answer. I'll try to click it. It's because I lift it up. It's just a bit of habit, and it's really close to my microphone. But I'll try to be a little gentle with it. Okay, so non-farm payrolls, the labor market is in many ways single-handedly the most important part of what the Federal Reserve and the U.S. economy is focusing on, because that's what Powell said at his last meeting. He told us very clearly that it is the labor market that he's watching. So these labor market numbers are very, very important. And if you take a look at this image here, you can't really see it so well because it's distorted by this. Although there we go. You'll see that last month, let's go over here. You'll see that last month we actually had a rebound in job growth. We had really ugly jobs numbers in August. We had a rebound in job growth in September. So the market is looking for non-farm payrolls to be pretty much the same level that it was at in September, Yes. What am I trying to say? Basically, the same level that was at the previous month. Actually, let me correct this. This is so pretty much around the same level as the previous month. They're expecting average hourly earnings growth to slow. They're expecting the unemployment rate to remain steady. But as we all know, if you've traded non-farm payrolls with me before, you will know that very rarely does it meet expectations. Very often does it surprise in one way or another. So there is a very, very good chance that the jobs report is going to surprise either stronger or weaker. And the question is, in which direction? Now, as we get closer to the non-farm payrolls report, and I encourage you to watch my daily videos that I post on X, you will know that we get a lot of what I call the leading indicators for non-farm payrolls. And the leading indicators for non-farm payrolls are basically the ISM numbers, the ADP number, and the Challenger report, all of which come out this week. So they will give us a sense of how strong or weak the non-farm payrolls report could be. My inclination is that's probably going to be weaker. We have some strikes that are happening that could very happen. There's some negotiations and strikes that could very well happen that could lead to weaker jobs numbers. So, the market is waiting with bated breath for the jobs report. And, they're waiting to help them decide whether or not the Fed is going to cut interest rates by 25 or 50 basis points at their November meeting. Now, every Monday, I like to look at CME Fed Fund futures. I like to show them to you, and I hope they start to become a habit of yours as well. So this tells us what's priced into the market, what the market is looking for in terms of the size of the Federal Reserve interest rate cut the next month. So the next meeting date is November. Right now, rates are at 4.75% to 5%. This is what this level tells us. So the market is pricing in a 58% chance of 4.5 and a 41% chance and 4.75. It actually summarizes it here. So basically, the market is pricing in right now 0% chance that rates will remain unchanged in November. And they're pricing in a slightly greater chance of a 25 over a 50 basis point rate cut in November. But, these odds are pretty much the same, in my opinion. I don't think that, 58 and 41 is really that much of a difference. So that means that there's no consensus. That means that they're still waiting for data to give them that direction. And the ISM reports are coming out this week. Manufacturing and services is just as important as the non-farm payrolls report. Now, chances are, just kind of taking a step back and looking at how the U.S. economy is doing. The manufacturing and service sector is probably weaker. But the reason why my fundamental heat map for the dollar is neutral is because both the Philly Fed and the Empire State Survey, both of them have shown strength in the manufacturing activity. And it's shown strength in manufacturing activity. And so because it's shown strength in manufacturing activity, there's a very, very good chance that ISM manufacturing could be stronger. But even though ISM manufacturing could be stronger, what's much more important is how the service sector is doing. So the service sector could end up being a little weaker. And within the service sector report, that's where we look for our leading indicator for non-farm payrolls, the employment report. Because the ISM, I don't think the charts have it, but we can take a look. If we look at, let's see if it has it. Sometimes it does. US ISM. Here we go. ISM non-manufacturing employment. And then I'm going to add on US non-farm payrolls. They're probably going to call this jobs. NFP, US NFP. There we go. And hold on one second. We're going to move one to the other scale. All right. And I'm just going to make these regular. So this is non-farm payrolls on the left. And this is the employment component. So generally speaking, and I know it's a little hard to see, but generally speaking, the employment component of ISM is a leading indicator for how the report fares. So like, for example, you can see here, right now we have the August report, that number that was published in August, and you can see that bumped up. Now the ISM report did drop, so it wasn't like the perfect leading indicator. But in general, over here, you can see for the most part, most of the time, it's not perfect, but most of the time they are leading indicators for each other. Because if you think about it, how the services is the biggest part of the economy, and how the non-manufacturing index and the employment component fares tells us, you can't really see it because it's distorted by these huge numbers, is indeed a pretty good leading indicator for non-farm payrolls. And that's it's one of the things that we're going to be looking at when we look at this week's report. So non-farm payrolls report is on Friday, but we do have the ISM numbers come out beforehand. All of them will be market moving. Many of them are going to be tradable, and I'll be trading them with the BK traders. And we are going to be basically, we're going to be using all of those to help us drive into the U.S. Jobs report. Boris, can you do me a favor? In the Gas Kathy room, they're just looking for the link to today's live stream. So if you can just drop that in there. So I'm neutral bullish dollars. I think that non-farm payrolls is going to be weak. I think that the unemployment rate could increase. I do expect average hourly earnings growth to slow, but we'll have to see how the leading indicators fare. With non-farm payrolls, the best way to trade it is to trade it reactively. We never trade non-farm payrolls proactively, although sometimes, we may trade in the days leading up to it if we have an opinion. Like, I think that jobs report is going to be weaker. We're going to have an opinion on that, so we may trade it a little bit proactively, but aside from that, it's mostly going to be reactively. Now, I'm bearish euros. I put this together for our BK traders before today's today's inflation report from Germany. The most important piece of data from the Eurozone this week is going to be the inflation report from Germany and the Eurozone. German inflation data was already released this morning, and this morning's German inflation report was weak, which is actually no surprise because inflationary pressures are down across the globe, and all of the inflation indices that we are getting should be weaker, but inflation is expected, it was flat, and tomorrow's Eurozone inflation data should be softer as well, which should weigh on euro. And it should particularly, in my opinion, weigh on euro against Aussie, Kiwi, and the commodity currencies. I think that's probably the best opportunity. Pound hit its highest level since 2022 last week. Neutral pounds this week. Now, in terms of the UK, we did have GDP revisions this morning, but that's pretty much it. We have some PMI revisions later this week, but PMI revisions aren't incredibly market moving. And the key here at the Bank of England is that data in the Eurozone has been very terrible. And the only reason why euro is trading as high and as strongly as it is because of US dollar weakness. And it's really for no reason other than that. Now, in terms of sterling, though, data has been not too bad from the UK. And because data hasn't really been all that bad from the UK, sterling deserves its gains much more than euro. Now, euro pound has fallen quite a bit and, dropped, basically to its weakest level since 2022 last week. But sterling deserves to remain strong. Aussie also deserves to remain strong. The big story going into today was that China continues to come out with more stimulus for its economy. Last week, it introduced, a whole bunch of measures that was people considered a big initiative to promote, growth in the economy. And overnight, they announced that they were going to cut interest rates on existing mortgages by as much as 50 basis points. I mean, think about it. If you're American or from any other country and you've got a mortgage, and suddenly your government comes out and says, on a blanket, I'm reducing everyone's mortgage rate by 50 basis points. Wow, that's going to be a sigh of relief. That's going to make their people feel a little bit richer. It's going to make their people feel like there's a little bit more fluidity in their spending capital, and it's going to ultimately do what they hope, which is encourage them to spend. And so I think all of the measures has and could continue to support China's economy, and by proxy, our proxy is the Australian dollar, which has benefited significantly from the Chinese stimulus. And it is part of the reason why last week we were all over the short, Euro Aussie, Euro Kiwi trades, and today Euro Aussie is down quite a bit as well, because all of this stimulus is quite positive for the Australian dollar. And I think it will continue to be. We already had the PMIs, even though China's data was weaker, the market looked past that to the positive effects of Chinese stimulus. Now, Chinese markets, I believe, if not, I'm not incorrect, are going into holiday. It's Golden Week in China after today. And most workers are off for a Golden Week. So chances are there's going to be no additional stimulus during Golden Week. And we are not necessarily going to get the extra support from the Chinese markets, because the Chinese markets, are to some degree closed as well. So maybe the Aussie rally could start to fade a little bit, but still underlying beneath it, I'm still a buyer of Aussie on dips than a seller. From Canada, we had Canadian GDP numbers on Friday that was stronger. We don't have much from Canada until Friday, when we have the IV PMI report. And the dovishness, RBA has been very steadfast on their signal that they do not plan to lower interest rates this year. Canada, on the other hand, has been pretty steadfast on their signal that they are not going to be, that they're going to continue to cut interest rates this year. So I remain bearish the Canadian dollar. Keep an eye on oil. We don't have much in the way of Canadian data this week. So Lien is very much going to trade on the market's risk appetite and how the market's appetite for US dollars. That's really going to be driving the Canadian dollar movements. For the New Zealand dollar, we also do not have any major New Zealand data this week. We had the Chinese PMIs, and so and Chinese stimulus is helping the New Zealand dollar. The reason why Kiwi is neutral and Aussie is bullish is because RBNZ is expected to cut interest rates before the end of the year, and the Kiwi is certainly not pricing that in, and the value of the Kiwi is certainly not reflecting it. So Kiwi, could reverse. It could underperform. It could sell off, particularly against, in my opinion, the Australian dollar. But Kiwi this week should trade on how the US dollar trades, as well as how stocks and risk appetite fares. Swiss franc, I'm bearish Swiss francs. We've got Swiss inflation, Swiss retail sales numbers, SMB, cut interest rates, signal more to come. And I think overall, you're going to see more weakness in Swiss data. I'm neutral the Japanese yen. The BOJ has been very wishy-washy. At one point they say they are reluctant to raise interest rates again. Another, they are committed to raise interest rates. I think yen is very weak. I think that we'll have to continue to see how things fare. I think that the path of least resistance for yen should be higher, but we may get an opportunity to sell it at higher levels. So I would say I'm neutral bullish yen against all the major currencies. We'll use our ZIP strategy to help us gauge, at what point we can get into the yen pairs. We're gonna let, the fundamentals are still bullish yen, but we have certainly come off its lows. Now, taking a look at the economic calendar, going through the main reports of the day, and hang tight because we're going to move into live trading after Boris is going to move into live trading after we go through our outlook and plan the week. But taking a look at the data, as I said, Japanese data was kind of mixed. UK GDP was revised lower, but the house price index, current account numbers were stronger. We have a lot of Fed speak this week, including Powell speaking at 2:00. And in general, I think what's important to realize is that, this is a week all about the dollar, because we have Fed speak, because we have ISMs, because we have non-farm payrolls. all of that will mean that, Powell is going, all that's going to mean that headline risk and data is going to be very, very important. Now, Powell is going to be speaking at the National Association for Business Economics. And so he could say something that is interesting. He could offer clues on monetary policy, the state of the economy. We'll have to see. So, as always, don't be surprised if there could be some volatility around this time. We also have Chicago PMI at 945. In many ways, what the central bankers say could be even more important than the data in the front of the week, because we don't really get the ISMs and ADP until Wednesday. So Powell is speaking today, and we have no major U.S. data today. Tonight, we have the jobs report from Japan. That's always important. We have the Tankan survey, which is a business confidence index, which is always significant as well. We also have the Golden Week in Japan. We have Australian retail sales data, which is probably going to be good because we had a really strong jobs number from Australia. We also have, what else do we have? We have Eurozone inflation data. We have Swiss retail sales tomorrow, which is probably going to be softer. Revisions to Eurozone PMIs, which no major changes are expected. The main report for Eurozone this week is going to be the inflation report. And the market's already handicapping and expecting a weaker inflation report. And I think it will be weaker. And I think it could lead to some weakness in the euro. We have the ISM manufacturing number. That is expected to be stronger, and I think it will be stronger because Chicago PMI and the Philly Fed was stronger. A lot of Fed speak once again, so make sure you pay attention to that. And then on Wednesday, that's when we get the more important data, aside from the Eurozone CPI, in my opinion. We get ADP. This is a very strong leading indicator for non-farm payrolls. That is expected to be higher because last month's report was so weak. We also have the trade data from Australia. And then what else? We have on Thursday, the Challenger job cuts report, some minor data from Europe. We have ISM services, very, very important. Market is looking for a stronger number. I think the risk is going to be to the downside. We also have jobless claims, which is going to be important. And then on Friday, that's when we get non-farm payrolls. Non-farm payrolls is the main event this week. And the market is, based upon the price action, prepared for a weak number. But the Fed fund futures show that Fed fund bond traders are not prepared for a weaker report. So, we'll have to see where the disconnect is there. But we have that, and we also have the IV PMI report. So all of that is very, very important. Taking a look at the charts, we'll just go to a regular Eurodollar chart, remove this and bring in our indicators. You can see that euro is hovering near its highs, and we're going to have to go to the weekly chart to figure out where resistance is. The main resistance level is at the July high of last year at 112.75. That is the main resistance level in Eurodollar. Now, taking a look at the fibs, you can see that is important because it coincides with the 61.8% fib of this move this move lower. So it is not only a swing high, but it is also a significant Fibonacci resistance. On top of that, we have a lot of option expirations at the 112 level that is expiring today. So we have a lot of option expirations that are expiring today. And once it expires, that could kind of open up the floodgates for a move towards this level here. I have a question from Park. When you're neutral, does that mean that you will not trade those currencies? No. When I am neutral, it means that I will have the free reign to trade the positive and negative. I'm going to share the positive and negative zip signals. So if, for example, I am neutral dollars, and right now in the sell zone, then that means that right now I'm still going to be a seller of the yen. But if I'm neutral, that means that, for example, if we get into the buy zone, I'll be fine with buying because it could go either way. Now, of course, there's other factors at play, like how the sentiment in the market is. But that's, kind of gives us the door to take either direction. but 112, this level is a fib level. It is a swing high. Pound dollar, we, obviously have the most recent high as resistance, but that's not far from here. The most recent high is 113.34. 134.34. That's the main resistance level. And that is also a fib retracement. This is why the fibs matter. And above there, if we do get above there, the next level is going to be 130. 135 is definitely going to be a level. But taking a look at the weekly charts, this 136 level, which is the swing highs from this level, swing lows from here, is more important. As for dollar yen, we're going to look at the daily charts. With dollar yen, you can see that it's retracing to the 20 SMA. The main resistance level is 144. Support is down at right below 141. Right now, it's still bearish. If it closes above 143, then we're probably going to squeeze up to 144. Otherwise, as long as it holds below 143, it looks like it could correct lower. Dollar Swiss, still very much in the sell zone. We actually had a zip sell signal in dollar Swiss. Monday signals are a little wonky. I usually don't trade Monday because it's just kind of position adjustments, but this is a classic zip sell signal. Just like here, you have a classic zip sell signal over here as well. So classic zip sell signal. And, that's when you have a red background and the currency trading below the indicator line, and we have a white candle. The white candle gives us a sell signal. So we're still, bearish dollar Swiss, but it's deeply oversold. And it definitely is a cause for caution because we are, pretty much at the December lows. I'd be leery of taking this trade. With no catalyst. Aussie climbing to its strongest level since July of last year. And we've got resistance at the 200 SMA, which is 69.70, and also at 70 cents. That's certainly an important resistance level. So we have a lot of resistance in Aussie dollar. We have resistance from a moving average. We have resistance from the rounds number. We don't have fib resistance from this over here, but let's see if we have fib resistance from over here. Yeah, it's pretty far, but it's not that far. So we have resistance at the 200 SMA. We have resistance at 70 round number. We have resistance at the 38.2% fib at 70.50. So a lot of resistance above current levels in Aussie dollar. Kiwi dollar, we have resistance at 64 cents. That's quite significant. And, although a little less resistance in Kiwi than Aussie. Dollar CAD still very much in the sell zone. Looks like it's an inside candle. It still looks like it could move a little lower, but I think the fundamentals kind of favor CAD weakness versus CAD strength. But, that's basically what I'm looking for the coming week. I'll let Boris share his thoughts on gold. And, if you have any questions, feel free to ask me. And if you want to learn more about how to trade with fundamentals, definitely check out the links in the description of this video. Today is also the last day to save 80% with Apex for their challenges. So make sure you take advantage of that as well. So hello, Boris.
Hi guys. Good morning. Welcome to Monday. A really big week, I think, this week, because we have all this employment data coming up end of the week. And also lots of, as usual, geopolitical risk. And then, of course, the other thing that's happening this over the weekend, which I don't think has really gotten nearly as much play as it should. Many of you may have seen the pictures. Is the horrible humanitarian disaster that happened because of the Hurricane Lien in western North Carolina, eastern Tennessee, in the Appalachia region. Part of the reason why it's not getting a lot of play is because these are very small towns and, nobody's really sure what's going on, but it's clear devastation is actually horrible. But in addition to the fact that there's enormous amount of humanitarian toll there, there's also an economic story that I think everybody is missing. That region of North Carolina has the purest silica, sand, needed to produce chips. It's an incredibly vital part of the supply chain for virtually everything that we use in our modern life. And, nobody's really appreciating the fact that there could be a massive disruption there as far as chip production goes. So we'll see. I think it definitely merits much greater follow than it has been, because I think people are just completely unaware of the.
I'll be firstly, I didn't know that. I didn't know
Yeah.
that they were such. I certainly was aware of the devastation that happened, but I certainly didn't know the industry.
economic impact.
So
Right?
yeah, the industry and the economic impact that they had
Exactly. Exactly. And I think, we'll have to see, just how quickly people can get in there, whether it's really something they can fix quickly, or whether the roads are going to take a long time to get through and all of the production, goes online. We'll see the story develop if it becomes a major source of concern, but it's something to put on your radar to just be aware of, because it might hit the wires. And the second interesting piece of data this is from Zero Hedge. We always take Zero Hedge with a barrel of salt, but when they post stuff that's actually factual, I think it's fascinating. So one of the things that they posted is that there's $11 billion worth of what's called SPX gamma. In plain English terms, what it means is that the dealers are very, very, very sensitive. This is all the option dealers are very sensitive to a move in the S&P 500 right now, because they own a lot of puts on the product, and any kind of a massive surprise, one way or the other, but much more to the downside, could really create a pretty serious collapse in the S&P. So just be aware that there is a potential here with the option tail to accelerate any kind of sales that keep going on. We've had just incredibly positive markets here over the last several weeks. So the potential for a quick fall is very much there, specifically because positioning is just really, really skewed. So be mindful of that as well. Now, as far as just stuff that's going on here from our perspective, I've just been collecting scalps all morning long. I wanted to share with you a couple of trades that I did. This is the S&P 500. This is the bread and butter trade. We're going to be doing, our rule of thumb is I promised myself that we're never going to trade 9:15 to 9:45, because every time I do this, especially on a Monday morning, it always spells disaster. But once 9:45 clears, we're going to start making these trades. But in the meantime, these are stuff that I did overnight. I just wanted to show you just how powerful it is to simply trade with my BK scalper indicator. 1 point. That's all I look for. 1 point in the S&P. Did a trade here at 4:30 winner. Trade here at 5:19 winner. So basically, I'm buying the buy labels, selling the sell labels. The first label in the trade. This was a reversal trade, and I'll talk a little bit more about it. And I actually, over the weekend, made a whole video, which I can just I'm going to post a link here so you guys can actually watch this. Let's see. Okay, let me make sure I got this. Yeah. Let me see if I can send this to you. It's a Loom video I made that describes my strategy in great detail. I never get a chance to fully explain all the rules. Everybody's always asking me for the rules. This is completely descriptive in this particular video. It's about 25-minute video. Really help you to understand the trend trades, these were the trend trades, and the counter trend trades. The counter trend trades only occur once you've had a massive amount of sell-off, at least 3 or 4 sell labels. So here you have 3 sell labels. I went to the upside, managed to get out of it with another positive trade. And then, I couldn't help myself. I took a little scalp over here, which I shouldn't have. And what I did is I realized, hey, I'm really not in my zone. I took half a point instead of a full point here. Similarly, lots of trades in gold as well. This is a straight buy signal that I took over here. That I trade. Here's a. Did I buy this? This was the stop out. I don't know why I bought this. Why was I buying this? This was just a mistake, actually. I think I shouldn't have been on this trade here. I was just fooling around. And then actually a couple of NASDAQ trades that also worked very, very well for me. Let me find them for you. Where are they? Oh, here we go. This was all Asia session. I was just trading in the morning in Asia Open. So buying the reversal trade here, then the buy trade here did not work, but the sell trade here did. And I think I kind of want to talk a little bit about all of this before we start trading, which is that very, very important to understand that not every trade is going to work. Now, the trades that we have in the scalper really work like 6 out of 7 times, but that means 1 out of 7 times they're going to fail. And instead of freaking out every time they fail, instead of getting upset at yourself, it's really, really important to stay on strategy, to really pay attention, and to actually have faith in your trading. Now, Kathy is far superb at this than I am. She's been trading Zip for more than a decade, maybe almost 2 decades in a way, and her consistency record is enormous. Partly because she has an enormous amount of faith when things go wrong, right? And I want to show you. I think I posted this in my. Let me pull this up. Just 1 second. I want to find it off screen here before I post this. I did this in our chat room on Friday. It's just a contrast between going on tilt, which is just completely screwing up. Let me see if I can find. Let me just find it for you guys. Okay, yeah. So let me see if I can bring this up here. Everybody should be able to see this. This is me. I traded privately on Friday. I didn't trade on YouTube. And I just went absolutely nuts, not taking any of my setups, screwing around. Just, when I'm hanging out with the guys in my room, I tend to just be much more relaxed. I'm not, taking the perfect trades, because a lot of the guys in the room, of course, know the setup really well. So sometimes we experiment. But the problem is, when you get loosey-goosey, you go off strategy, you just get destroyed. I went so negative in my P&L during the live trading with the guys. And then I just said, stop the bullshit. Just stop the bullshit. Focus on strategies. And you can see how literally in the afternoon I completely recovered this, right? And that, I think, is just an important takeaway is, our motto is BFF, be freaking focused, right? Be freaking focused when you're trading. Take the setups only when they show themselves. Don't get upset if they don't work. Move on to the next setup. Don't try to force trades. So much of prop trading, so much of personal trading is literally a function of you understanding these concepts. The strategy themselves is easy. The control over yourself is the real mastery that we need to have, right? And that, I think, is was a really, really good lesson, using me as an example. Screwed up royally. I finally, took control of myself, started trading. And you can see, trading has been very, very steady since. Win, lose, or draw, I've really been focusing much more on all of the stuff that's going on here. So hopefully you guys will find that of value. Let's do our first. First, let me actually stop this end poll of the best strategies. And the question I'm going to do for the poll today is not how many times have you ever been on tilt. Tilt meaning that, have you ever lost control? Let me just actually, have you ever lost? No, the question I want to ask is actually not have you lost control, but how many times? I'm assuming you've lost control. How many times have you lost control in past month? Be honest, all right? Be honest here. Month. I'm going to say once, 2 to 3, and then 4 or more times. Okay. Be honest. Answer this question, because I think it's so important that we all kind of recognize that. That's really our greatest weakness. It's not the strategy. Strategies work awesome. We don't need to do anything but actually take the signals on the strategy. We actually had a buy signal here, but again, I told you I'm trying not to trade the 9:15, 9:45 window, and so I just I'm not going to take this buy signal over here. But it's a legitimate buy signal, second buy label, so well within our kind of early trend territory. And I've been long here, 86.75, went down 85, so it's 87.75 would have made me a bit over here. But I will, I'll pass it up here as I'm trying to stick to my rules. But we'll see if there's more more signals that appear for us. For now, we can't take any more buy signals because the first 2 buy signals is all we allow ourselves as a trend trade. Now we'll have to see if the S&P reverses or if it does more continuation trades here, then we can take advantage of it. Similarly with gold, by the way, gold has 2 buy signals. No more buys for us. No more signals until we get either a third continuations. Nasdaq has a buy label here. All right, I'll take we'll take the small Nasdaq once if it completes. And the reason I'm going to take it is just because I want to show you the trade. I'm trading only. First of all, it's got to hold, right? So we have to see if the buy actually holds, because if it doesn't hold, we don't have a trade. So let's see if it holds. It doesn't hold. See, that's exactly what we. Oh no, it does hold. So I'm going to go buy market.
Order filled.
All right, I'm long market, and let's just follow this trade just to show you, what I'm doing. I have just kind of let you guys know, philosophically decided that as far as the sweet spot for Nasdaq gets done, it's a 7-point target, 21-point stop. So we're always trading with a 1-to-3 ratio. The very, very difficult part in Nasdaq was finding that sweet spot where it almost always hits that profit, because I want to hit the profit 6 out of 7 times. 5 was very good, but the stop was too small. 10 was a little bit too much. The stop was great, but the target sometimes didn't get hit. Now we're pumping up. So that kind of a Solomonic split between 10 and 5 at around 7, I think, is the right sweet spot for Nasdaq. So those of you who are interested, and it's in the video that I made for you guys. You can watch the video all over the place. That's the right trade to make. So I'm sticking with around a 7 target. That seems to work pretty well. From a technique point of view, as I've mentioned in the video, and I've told everybody, we're just coming in market. Like, the whole idea here is, if you're going to go for the first 2 labels, just take that trade. Have the faith that it's going to resolve, because of course it resolves most of the time. So this trade got hit, first trade of the day. S&P obviously also got hit. Everything is popping early in the day. It's 9:37. We'll see how the market wants to feel about everything as the day goes by. But that's basically where things stand right now. Let me see if I have any comments from you guys here. Yeah, Enrique says that great mentality always beats great analytics. It's true. What you really want to have is kind of the best of both worlds. You want to have good mentality and good analytics. Yeah, the other issues, thanks, USA Forever. I totally forgot. Another thing that nobody's really talking about. It just seems that everybody's super, super la-di-da happy, which is fine. I mean, the economy is definitely very strong. Can't deny that. Certainly on the top 20% of the population, man, every restaurant in New York City is full. Everybody's partying. I can't really make it any legitimate case that the economy is. I think it's hurting possibly the lower 50% of the population, but the upper 20% of the population, it's still the great Gatsby hour for everybody. But as we're looking into the horizon, there's a couple of clearly worrying macro things. One is this whole disaster story in Asheville and a possible supply chain disruption, aside from, of course, the horrible humanitarian crisis. I mean, it literally looked like a nuclear bomb took them out. I mean, I've never seen absolute devastation. If you haven't seen the pictures, they're just horrendous. The second big economic issue is the port strike. There's going to be a port strike on October 1st, right? Nobody's settling this. And the Biden administration, they have the power to force the workers to go back to work as a national security measure. And they seem to be pretty complacent about this right now. So really concerned about that, because that's going to create a whole bunch of supply chain disruptions. You remember, you stop the train. It's not like you can restart it. Everybody backs up. They already stopped shipping. The trains already stopped shipping to the ports right now because they're afraid nobody's going to accept the inventory. So, everybody thought September was going to be the bad month. October could be the surprise that none of us really wanted. I mean, that's the thing. We always like to look at the past, but the past in the markets never quite repeats itself the way everybody expects. But it doesn't mean that it doesn't repeat itself. It does quite a lot. So generally, I'm just very, very cautious on all of the macro stuff as it goes. You don't see gold or S&P on your trading view. You need to. I'm using Apex. By the way, all of you guys absolutely get the Apex offer. If you get the Apex, I believe I already have a TradingView subscription. So you need a TradingView subscription. Subscription? Yeah, subscription. I was going to say prescription, but no, subscription. Guys, the thing about TradingView is we don't have any relationship with them. It's not like I'm humping them. It's just a necessary tool. You want to be a retail trader in the world today. If you don't have TradingView, you really can't. It's like saying I want to live in America and I don't have a car. It's the same thing. It's a functional item. Get like the $15 a month subscription. That's more than enough for what you need as far as all the indicators and everything else. But if you get that and you're part of Apex, you actually get all the quotes, everything for free. And the gold signal is the GC signal. The S&P is the ES. That's the future signals. And then of course, if you're trading if you're trading CFDs, those are free anyways. Those are free from ACAP. You can get the ACAP signals right on your charts. But for those of you who are new, I'm actually curious. That's going to be our next question. Again, not like I hump for TradingView, but I'm curious how many of you have TradingView as a tool, because the answer should be 100%, not because I love the product, because the product is just absolutely necessary for anybody who wants to trade, because you really it's the best charting product. It's on the web, super easy to use it, blah blah blah, so on and so forth. All right, I'm just looking through the charts here for a sec, guys, to see if we got anything going on over here. Interesting that wow, so kind of interesting, right? Friday. The Dow was the best, and today the Dow is the worst. That's sort of interesting. So Dow is a sell. Dow is actually, if we get a second sell label, would be a trade for us. So I'm actually, you know what? Hang on a second. Let me add my Dow. And my MZ4, select. Let me 1040. Okay, that's good. We got a second sell label over here. So yeah, it's coming up here. Again, remember, so I'm going to do a trade with you guys if this thing trades. It's a 10 target, 30 stop. The sell has obviously got to hold. This candle's got to hold for the duration. We got 28 seconds left. So let's see if it plays out. All right, 18 seconds. Big move. Dropping hard. Market's starting to sell off. 8-9 seconds left. 3, 4, 5. Sell market.
Order filled. All
right, so let me show you where it is. So, and we're looking for it, and boom, 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 super fast. And again, this is what I kind of wanted to, you guys see that in my scalping, you snooze, you lose. That's why market has become, I think, a necessary way. If you have the signal, take the market trade. Now, obviously, yes, you have this retrace risk over here. It's a super, super long trade, blah, 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 so on and so forth. Doesn't matter. You're trading probabilities. This trade either works or it doesn't. The general idea is, as long as you got the right setup, it's going to work 6 out of 7 times. Take the trade, make the money. Don't overthink it. Don't overthink it, and also don't chase it. That's I think the 2 big mistakes. You overthink the good trades, and you underthink the bad ones. Is there such thing as underthinking a trade? I think so. Somebody's asking about Thinkorswim. Thinkorswim is fine. But again, the indicator that you are looking at is written strictly for TradingView. And of course, you can get it, it's a private indicator. You can't get it on TradingView, but of course, you can get it from us if you just join us. I just put in a discount link if you want to join us on BK. But virtually everybody in the world uses TradingView, creates indicators for TradingView, gives you, because it's just the easiest platform in the world to use for charting, right? And also trading. You see, I'm trading, right? I'm trading using TradeEvade in the background. You don't see me placing trades because it's off screen, because otherwise it just you see how fast I have to trade. So if I start putzing around with screen changes, it's going to be a disaster. But you can see right away on the screen the trade goes live and it's done. Boom, 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 and we're done on the trade. So that's all I'm saying. Would actually. So let's see. Oh, you guys, let's take a look at this poll. This poll is super interesting. So this is very accurate, and thank you for being honest. So basically, 57% of you guys, this is a really interesting point. 57% of you guys, like basically 2/3, or whatever, 60% of you, I think, I'm part of this crew. Tilted, meaning lost total control of your emotions and therefore lost total control of your account 4 or more times this month, September, right? So let me ask you a question. Just imagine if you cut that in half, right? You only lost control twice. And then maybe the month after that, you only lost control once. And then the month after that, you lost control, every 2 months. Like, that is the game we want to play. It's not about like, oh, I'm going to be instantly great and I'm never going to fucking lose my shit. I'm going to lose my shit all the time. But I'm going to do it in the minimal fashion possible. Less and less and less. That's really my game plan. And it becomes a lot easier. It's actually like the more conscious you become of not being a stupid fuck, of saying, hey, okay, I lost on this trade. I don't have to get it back right away. Oh, damn, the market went sell, buy, sell, buy, sell, buy. Like this is a sell, buy market. In other words, no continuity, no continuity, no continuity. Yeah, it's, this happens. Market gets totally flat line. By the way, this is the reason why, I don't like to trade YM a lot until I get some kind of movement, because you can see this is the death knell for our strategy. Yes, sometimes you get whipsawed, sell, buy, sell, buy, sell, buy. If you are aware of this, right? If you're kind of aware ahead of time that bad shit can happen, it's a lot easier to accept it in the moment of battle and then move on. And that means you don't lose control. That means you actually retain control of yourself and your account, and just move on and keep trading. And that is a great goal for all of us, which is to reduce tilt. Reducing tilt will be the single most profitable strategy you have. Because I said, we have the strategy. We have a strategy that trades well. Oh, there's a gold signal for us. We have a sell signal. I'm sorry, guys. I missed the sell signal. Whenever I pontificate, I can either pontificate or I can trade, but I can't do both. There was a sell signal on gold. I should have taken it over here. I didn't take it, and this is a good example. What's the worst thing I can do right now? The single worst thing I can do right now is take this trade. Why? Because I'm chasing the trade. The trade was here. The trade was 54. The trade is not 52. At 52, the trade already has a very negative risk reward trade. Yes, it may work, but it's not a 6 out of 7 trade. It's not even, it may not even be a 1 out of 2 trade. It'd see up my ass right there. Had I taken this trade, I would have been stopped out. So the single best thing you can do is reduce tilt. And the second best thing you can do is don't chase, right? You missed a trade, you let it go. These are things just like, I'm working with all the time. And as long as we are mindful of it and we can reduce it, it's not about being perfect. It's about being less imperfect. It becomes so much more powerful on the P&L side. It's not about winning. It's about just kind of minimizing the stupid mistakes that we all do. So that's interesting. Thank you for the poll. Let's do one more poll because I'm curious now on the issue of trading. I have let's see, NASDAQ. What's NASDAQ doing? NASDAQ, I think, goes to third buy. Third buy. So this is not a trade. It could work, but this is not a trade. This is interesting. So NASDAQ is third buy label, right? We can actually watch this very carefully because once we establish 3 buys in a row or 3 sells in a row, we can look for an intelligent reversal trade. An intelligent reversal trade, as you'll see in the video that I made for you guys in Loom, is when we have not one, but 2 red moves. So we have a green move, red move, green move, red move. That if the second sell-off wave after 3 consecutive buys without any fresh buy labels, that tells us, yeah, we could be in for a reversal. Let's take that reversal trade. So right now we can watch NASDAQ because we got 3 buy labels on NASDAQ. S&P is still holding only 2. So NASDAQ is the only one that's setting up for a possible reversal. We can trade that if it happens. One of the cool things about this particular setup is that the reversal trades are easy to anticipate once you see the structure in the market, right? So once you see 3, 4 labels in a row, you can just sit here and hunt for the reversal trade. So like here's step number 1. This red area holds, and obviously it's got to hold, but if the red area holds, that's step number 1. Then we need the green area, and the second area will be our sell signal. So we'll watch this while it's going on. So I will take my eye off the screen for a second to put the quick poll here. Do you have trading view? This is a really interesting question for both of you guys, people who have prop or people who don't have prop. I'm just curious how many of you have trading view as just a tool, because as I said, it's fundamental. Company pays me nothing to say this, so you know that it's true because I'm a user, not an affiliate at all. Still green, NAS looking good. Dow is not. Interesting that NAS, which is high technology, which I thought would be maybe impacted by all of this Asheville, North Carolina news, seems to be immune so far. Although it was weak on Friday, so maybe a little bit of mean reversion, stuff like that. Andrew is asking me, the buy and sell label to make the trades? I'm trying also to get into trading. What would you recommend? Where could I start? Well, Andrew, and I did not pay Andrew for this question, but I will be happy to answer it. Andrew, I run a coaching service, which is kind of like the best of both worlds. My Pass the Prop Academy is a coaching service that helps people pass the prop test. And as many of you know, I've said this many times, it's harder to pass these prop tests where you pay like $100 to take an evaluation. If you get and if you pass the evaluation, you get $50,000 of notional to trade, or $200,000 of notional to trade, depending on how much money you pay for the test. It's harder to pass those tests than it is to get into an Ivy League school. Less than 5% of regular traders can pass those tests because they're difficult. They're really, really hard in terms of risk control, in terms of the prop trading rules, in terms of how they stagger the whole thing. Whereas people who take my coaching sessions, 70% of those people pass the test. And then, of course, the second step after that is not only do you pass the test, but you get funded. And many of my traders are now getting paychecks, which I love to see. That they post their paychecks in our private room. So what I did is I created a combination of both our signal service, which includes all of the signals that Kathy does in forex and all of my signals that I do here in live trading, as well as a coaching in one massively discounted price. So if you're asking me, I'm new, I want to learn how to trade, the best way to learn how to trade is just to watch somebody else do it, right? Watch somebody else do it. Like the best way to learn how to cook is to watch somebody else cook, right? The best way to be a mechanic is to watch somebody else tune up a car. God knows I'll never fucking do that in my life. The best way to play tennis is to get on the court with somebody who plays tennis and start hitting balls. Same stuff. Watch me trade, see how the indicator works, get all the tools, and then come in for coaching, which I do every Tuesday night. Actually, we're going to be doing it this Tuesday night. And come join us. It's like a mass. It's like if you got the signals alone, it would be twice that price. But here you get the signals and the coaching for half the price. So it's a really good deal. That's what I would recommend as a starting point. So now that I humped my own coaching services, you guys are welcome to ignore me. Okay, just kind of let you know. 3 buys, first red. What I'm looking for, second green zone, move back above the moving average, and then fail again. If I get that second wave without a fresh buy label, I'm ready to go. Now, the other possibility that could happen here is we just get a sell label, like shit just turns, red. And if it does, we go short. If we get a sell label, it's a first sell label. I'll take that label on a trade. So, there's lots of different scenarios that could possibly develop. If I'm already a member, do you have to pay again for the the prop? You know what, Park? Contact me on Discord. Just message me. Let's take a look at your membership. We can always create a special deal for you. Not a problem. So I'm just watching the NAS because it's the only one that's kind of developing a potential trade possibility for us. But we need to move into the green, back into red for a reversal signal or an actual hardcore sell label, which so far is not developing. So we don't have it, for NAS. Markets are quiet. It's, Monday ahead of a very, very heavy data week. Wouldn't be surprised if we're doing that. Gold. Am I missing the gold buy trade? Yeah, sorry. I'm talking again and I missed the gold buy trade. Sorry about that. Okay, we'll leave the gold alone. The gold buy trade was here. Yeah, I could have had I been maybe about a minute earlier, I could have taken this, but that's fine. Now, one of the cool things about the explanation that I give you guys in Loom is that, okay, if I missed a buy trade, what's my legitimate entry into gold? It would be if it goes red zone, green zone. If it comes back below, comes back above in the green zone, the follow-up buy trade, absolutely viable for me as a trade. Nothing going on over here. S&P just dicking around. So we're just twiddling our thumbs watching the markets. Not many trades popping up, which is fine. You can contact us always by email. I'm going to put a contact. This is actually the only way you want to contact us at bktraders.com. Don't ever answer a WhatsApp message, a Telegram message, an Instagram message. They're all scammers. We never ask for money. We never do crypto. It's all bullshit. Don't ever fall for anything, okay? If anybody's asking you for money in my name or Kathy's name, they're scamming you. So just remember that. If you want to talk to us, contact at bktraders.com. We'll always answer you, and that's the only legitimate way to get a hold of us. So email us if you have any questions. Okay, Andy. I'll take a look at it, Andy. Watching gold. Gold is in the green zone. This would have worked, and I was tempted to take it, but I'm trying to show you really good habits. So don't want to do anything that's kind of bad habits. Not much setting up over here. So another interesting point. While we have a little time, it's Monday. We can shoot the breeze. By the way, guys, I'm just curious. I'm just really curious. How you like the broadcast, the quality of the broadcast, the quality of the screen size, all that stuff. Because I'm actually trading off the PC today. It's obviously a million times faster I only have two. I'm using a really widescreen monitor to show you guys, and I'm curious. Is it sharp? Is it clean? Do you want to see bigger? Should it be a little bit bigger for you guys? Give me some feedback. Oh, getting a sell signal in the S&P right now. So I'm going to get myself all set up for the S&P because that is our bread and butter trade, right? 36 seconds left. If this thing holds as a sell play, we're going to be trading it, coming in market for 1 point target. But give me some comments just on the visual experience, because I really want to trade off the PC now. It's sort of super fast for me. The Mac is lovely, but it's got and I'm losing. I lost my sell signal. No sell signal. This is why we wait. Fuck me. There you go. No trade. NT. No trade. All right. Ugh, what a teaser. What a teaser. What a teaser you are. All right. Nothing going on over here. S&P. Gold. Okay, gold. Let's putz around with gold for a little bit. We're looking for a green red. Do I get a if I get a green territory in gold, I'll go long gold. But the S&P kind of failed me a little bit. Well, it didn't fail me. It just there's no such thing as failing me. The market couldn't care less about my opinion. It just didn't give me the signal. I'm watching the S&P now. I'm just trying to see if I get maybe a secondary signal in the S&P. Kind of switch around between this and gold. No, nothing going on in gold here. Let's see what you guys do. I have any comments from you guys? Broadcast is good. Everybody seems to like it. I'm super happy. I think we're going to start using this as our predominant. So as I said, I love my Mac, but I'm driving like 5 monitors off that poor little Mac, and I got to upgrade to the new chip. And until I upgrade to the new chip, this Lenovo workhorse is so much better as a trade. I should post this up. So another point of interest for those of you guys, and I'm just kind of scrolling through. I'm obviously watching. I got nothing on S&P, right? So S&P kind of died out on this little test. So what we're watching for is to see if we can get a buy on gold. It's pretty much the only thing we got. Or hang on a second. All right, maybe we'll watch Nasdaq. I'm trying to figure out like what has the highest probability of giving us a signal. So Nasdaq, we need a green red, right? So now Nasdaq took a big red tumble, corrected. Is it going to give us a green zone and come back to red? I'll keep my eye on Nasdaq. But what I wanted to show you for a second is, so many of you are not degenerate traders. Many of you don't necessarily want to trade for 1 point or 7 points in Nasdaq, 5 or 10 times a day, take the prop test, get funded, and trade this way, which is fine, like totally legit. There's lots of you who love doing this. This is what I do. This is what this is what we live for. But there's a lot of people who just want to maybe not fucking look at the screen the whole time and trade like a dopamine monkey, which is what we all are. To which case, I've been working on my big Moby Dick project, which is my automated trading strategy forever. I introduced it a couple of months ago, and it's been working really well. But what I was going to tell you is this Sunday. Oh, we have a sell signal on NAS. All right, so let me focus on NAS for a second. If I get a sell signal, because I can't walk and chew gum at the same time. I gotta look at signals and talk. Now let's see if this comes in. We're gonna be able to take the NAS trade. This is a pure sell signal on NAS. 37 seconds left. Wonder if I'm getting a sell signal on the S&P. Nope, S&P is fine. So the only one that's legit is going to be NAS. 26 seconds left. Let's see if this plays out. 21 seconds, 19 seconds. Let's see if it holds. It's good. Don't fall for the early trade. 8-9 seconds. The candle's got to complete. 3, 2, 1. Okay, selling market.
Order filled.
All right, let's see where we're at on the trade here. The target is going to be 82.25. Stop is going to be 210.25. Let's see if this works. So we're in the NAS trade right now. 7 target, 21 stop. Big move. And you guys know I hate the NAS. That's why I trade the micro, just because I really don't care. But a lot of people love the NAS, and I want to show you the NAS trade every time we do it, so that at least you internalize it. This was a legit trade. We had a nice sell signal. NAS. The reason I hate NAS is because this is the instrument that retraces the most, right? And so the reason why NAS is so difficult is because within NAS, you can be right and stopped out all the time, right? And that's why it is such an art. It's always a calibration of, I got to give myself so much room to make bid. Come on, baby. There we go. All right. Mwah, thank you. Maybe I've figured out the NAS configuration, but certainly the 721 I think is the right sell mark. Anyways, NAS gets done. Those of you guys who took the NAS trade, good job for you. Another trade goes into the win column for us. Hope you guys enjoyed that. Now let's get back to serious price action, which is the S&P. No, I'm just kidding. And also gold. Is gold? Okay, gold. I'm actually looking for a green. That's the most viable next trade. Although gold, look at this. Gold might be telling us a sell signal. Okay, let's watch the gold for a second. All right, I'm going to get to my point as soon as these trade signals disappear, because I need to focus on the trade signals before I start talking. But the point is, I have this automated strategy. I have really, really refined it now to better than my NAS configurations. I've been trading it, live in my room. You guys can see the signals, and I'm going to be talking about it in a free webinar this Saturday. I'm going to send you guys the link to sign up in just 1 second. I just gotta find the link. But please come in. And even if you can't come in because whatever, it's Saturday morning, it's early. It's Saturday morning, 7 a.m. New York, so it's going to be great time for Australia, great time for Asia, great time for Europe. Horrible time if you're on the west coast of United States of America. But here's what I was going to say: as long as you register, you're going to get the video, the recording of the tape. And okay, got 13 seconds. Let's go to gold. Gold 8-9 seconds. Let's see if the sell holds. 5, 3, 2, 1. Sell market. All right, we're in gold. Let's see what's going on. So gold, this is just a half a point to a point and a half. Target is going to be 62.5. 52.5 is my target, and 54.5 is the stop on gold. Here's a trade. Gold kind of having a little bit of a downward move. Let's see if if this trade was legit. Give it a shot. How's my S&P doing? S&P doing nothing. It's very, very choppy. Notice, guys, lately, this whole, right now, up to 10 o'clock, we've just been doing chop. And, usually I've been like, oh, let's trade 10 to 11 because that's the golden hour. And now the golden hour is like 11 to 12. Every time I freaking try to create the perfect stream, the golden hour moves on me, which is just, typical market stuff, right? But, it is what it is. We will adjust as we can. If I can, maybe we'll make the streams like 11 to 12. But I can't chase the market every week on the week. Generally, the 10 to 11 should be the golden hour. Gold gets done. Another good scalp for us. You guys see this? This is the whole thing. I hope you guys now visually, it's much easier for you guys to see all the trades, see the logic behind it. Hit another forehand down the line. Hope you guys like that. Okay, now let me find my link, because what I want to show you, because I wanted to show you just how good the automated strategy is. It's 10 o'clock. It's going to now set up the NASDAQ trade and the US 30. I'm probably going to jinx myself, but you can see that resolves this trades the German, the US 30, the gold trade and NASDAQ trades once a day, 4 a.m. in the morning on gold and the German European Open. And then we trade US Open 10 o'clock on NASDAQ and the US 30. And you can see, it's resolving every one of these trades for the last 4 or 5 days that I've been running it. I put all the trades through into our Discord. You can actually see the all the trades, coming out. But what I'm going to be talking about in the webinar is the philosophy, the structure, and the actual robot, which I created that is going to be, that is optimized for all of these conditions. So hopefully you guys will really, really like it. And for those of you who are interested in kind of having the robots trade for you, all you have to do is essentially, let me show this to you. All right, might as well get totally crazy. Let me show this to you. So I'm going to go into Parsec. I'm going to show you the robot itself. I'll give you a preview of it. You see how it's, it's hitting the trades. All you have to do is once, at 5 o'clock New York time, 5 p.m. New York time for me, whenever the global day starts for you, you just simply come in here, you hit the reset button. Let me show you what I would, how I would do this. Gold. I'm not going to do this. I have to change this because if I hit this start again, it will start trading again. But you hit the reset button at 5 o'clock in the afternoon, hit start, and it's all set up. That's all you need to do. It's literally 5 seconds worth of work every day, and the robot does everything for you. Manages the trade, manages the inventory, manages the P&L, blah blah blah, so on and so forth. Right. So very, very cool little product. Hope you guys really enjoy it. Come. Let me give you the link to the webinar. Hang on. Let me find it and I'll give it to you. Just one sec. We already have about 300 people coming in, but absolutely, you guys are welcome to come in. Here's the link. Oops, hang on. Sorry, just one sec, guys. Share. No. So annoying. Copy link address. Okay, let me put this in the link here. I don't trade FX, my friend. So we trade strictly gold or indices. Okay, so this was gold. That gold trade worked. S&P doing nothing. NASDAQ trade worked for us, right? And YM, what's YM doing? YM had a buy, which I missed. Now would the YM have worked? What was this? 45? Yeah, it would have worked. It would have made that 10 points. It would have. We stretched it. No. Yeah, 45. It went 21 against us. So really, 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 tested our stops, but would have worked on the third label. So yeah, YM would have worked. Another, like in my panoply of things I don't necessarily love to trade, NASDAQ would be number one I hate. The YM would be number two I hate. Gold would be number three I hate. And then, S&P is what I love. Or the other way around. I like trading S&P. I like trading gold. I like trading YM after that, and I like trading NASDAQ. And actually, these days, if I can just find that sweet spot in NASDAQ may move to number 3 for me, and YM would move to number 4 as far as trading. The only reason why I don't love YM, and this is like kind of the other point I want to talk to everybody about, is size. I mean, the great thing about S&P, NASDAQ is also really, really good. What I mean by size is you can make a lot of money on, 1 or 2 trades. And if you do this 4 or 5 times a day, the question is, how do you make $1,000 a day? And there's some super easy ways of doing it that most people are just completely not cognizant of it. So I'll show you sort of my favorite way of doing it. So NASDAQ, this is S&P, right? If you trade for 1 point S&P and you do 5 contracts, I'm trading a $250,000 account, so 5 contracts is nothing. I do 5 contracts. That's $250 per trade win, right? Now, yes, let's assume a perfect world. I have four winning trades in a row. Although if you look at my trading, I already have 5 winning trades in a row today. But let's assume it's kind of like 7 wins, 1 losses, right? So now I'm +4 on that kind of a day, just kind of throughout the day. I'm just taking, high quality first buys, first sells. If that's the case at 5 contracts, I am net, 7-1. I lose 3. I win. 1 loses 3. 7 wins 7. So it's +4. That's 250 times 4. That's $1,000. Easiest way to make $1,000 ever, because there's nothing easier than making 1 point in the S&P. I always kid around. There's nothing harder than making 1 point in NASDAQ. Nothing easier than making 1 point in the S&P. It's not always true, but it's an exaggeration that hides, I think, a deeper truth. That is how you could do it, right? Similarly, if you're trading NASDAQ and you got this really sweet spot of 721, and again, we are on a 6-1 streak. You're +6, you're -1, you're +3 on NASDAQ. Now, NASDAQ is 20 points per point, $20 per point, and you are 7 points to the good if you're winning, right? So that's $140, right? And you're doing 3. It's not quite, 1,000, but it's 140 times. This is just 1 contract times 3. That's 420. So if you do 2 contracts, now you're up $800 on NASDAQ. And 2 contracts is very doable. Like, you can go 5 contracts on NASDAQ without really hitting liquidity limits. You can go 20 contracts on the S&P without hitting liquidity. But liquidity limits means that you're not going to get any slippage. It's going to get executed at that price without any serious problems. So that's the best way of doing it. Now, why the YM? Why do I choke on the YM? So YM is YM is not as nearly as liquid as either one of them. Like, S&P trades 2 million contracts a day. NASDAQ trades, I think, 1 million contracts a day. The Dow trades 200,000 contracts a day, right? So that means if you're doing 5 YMs, right, at market, there's a possibility you get slipped. Now, 5 YMs is the same thing as 5 S&Ps, $250 to the good, to the bad, but it's much harder to kind of consistently do 5 YMs at the prices you want, which is why I think YM is fine, but you have to understand that it's not as liquid a product as the S&P. So margin requirements are these. The sizes that I'm giving you, and the size of the trade, and the size of the contract, as the size of the account that I have. Remember, I'm trading the $250,000 evaluation account, right? So I have up to 27 contracts that I can buy as far as margin, as far as my margin controls, and I'm buying 5 maximum. So I'm so well underneath. My whole point is always give yourself margin of error on this. Now, if you're trading for your own account, I'll tell you what it's like on the future side for your own account. So if you're trading with somebody like AMP Futures, you have a $500 day margin, meaning that if you're trading intraday, you have a $500 margin for the S&P 500 and the YM. So on the S&P 500, $500 a day margin, you had 5 contracts at $2,500 worth of margin, and you absolutely, in my opinion, want to have at least 3, but ideally 4 times your minimum margin requirement. So that means you want to trade with a $7,500 regular account. But if you're doing that and you have just a couple of quality days, meaning a couple of days where you're 6-1, 7-1, even 8-2. A couple of those days, you're essentially on a $7,500 account making $700, $800 a day, right? If you're in control, and again, it's a big if you're in control, it's not impossible, it's not inconceivable to think that within a month you could essentially double your initial stake, and then just take that money out and trade with the house's money if you wanted to. All right, got a sell signal in the S&P. Let's go look to the S&P now. Now 24 seconds left. Let's see if this is going to be a legit signal for us. 18 seconds. Nine seconds. 5 seconds, 4 seconds, 3 seconds. Sell market. All right. In at 81.25. 80.25 is my target. Excuse me. Looks like it's going to retrace on us. Big retrace. We sold the bottom. That happens. This is one to possibly two bad trades out of the day, bad signal trades out of the day. That happens. It's a Monday, especially, so it's always going to be a tough trade. We'll see. Oh, there was I didn't see this. There was a second sell signal that would have worked nicely on the NASDAQ. Well, yeah, it would have been pretty good on NASDAQ. It's 161. Yeah, definitely would have worked nicely on the NASDAQ. So I just, I was talking and I missed it. S&P is the one trade that maybe, we've had 4 winning trades. This could be the first losing trade of the session. We'll see. Well, let it play out as it trades. See if I have any comments from you guys. Oh, great questions here. YM is the Dow, correct? YM is the Dow. NQ is NASDAQ. ES is the S&P. GC is gold. Those are the futures symbols for the various products that are traded on the Chicago Mercantile Exchange. Correct. Okay. Are you guys? Is this a big enough? Are you guys seeing this? The screen is big enough. Somebody's saying the screens are not big enough. It looks to me like it's pretty big. If you need me to make the screens bigger, always please tell me. I can always increase the res, but just let me know if everything is super visible or not. Pat is asking me, when I go on tilt, do I usually walk away or do we have a reset ritual? I don't have a reset ritual. My reset ritual is I curse a lot and I throw shit around. It is definitely worthwhile to take a walk. Definitely a worthwhile to take a walk. Yeah, so this is a little bit better, Gordon? Okay. Yeah, guys, don't be shy. Speak up and say, hey, Boris, can you make the resolution a little bit better? Because I can always make it larger on the screen. And I'm not, it's obviously clear to me. I want to make sure it's clear to you. What do I want to ask you? Yeah, so I don't have a reset ritual, and I don't even know if it's viable to have the thing. What I'm trying to do is, the better way to understand tilt is to be consciously aware of what's going on with this thing. Man. All right, sorry, I'm just watching the trade here. All right, you know what? I'm taking a trade out. It went so. Here's sort of my own thought process on all of this. And I think it probably would have made target, but here's the thing. We were very lucky. The thing retraced almost to our stop, right? And then it came right back out again. And now it's probably going to drop. But the difference between making an extra half a point or losing 3, and now of course it does drop, or losing the full 3 points because the market is just kind of fighting. as you see, the good trades that I make, that pretty much hit the target within the first minute or two. If I'm like in a trade for 4 or 5 minutes, I should be thinking about getting out scratch, getting out small profit, because I can always make the profit. It's hard. It's much more work to come back from a loss. So if I'm like 3 or 4 minutes into the trade, I'm kind of thinking about getting out. So in this particular case, I took half a point instead of full point. It certainly went for a full point if I was patient enough with it, but it's fine. We'll leave it alone and let it play itself out. As somebody was saying, this is usually a retrace time. 10:30 is kind of a retrace time in the markets. A little bit it is. Markets are testing, a lot of different categories. The point being is, you guys absolutely see the value of the labels. They work actually, 5 out of 5 times today, even stressing us out. And that's the game plan. So here's I get a second sell. So I'm not taking the second sell ES right now, because I got to go into a meeting soon. So I don't want to watch this trade. This is a legitimate sell signal trade, but one of the reasons why I'm cautious is because we had so much retrace movement against it before, that it just doesn't feel like it's a super strong sell momentum just yet. And I have having been burnt once, I'm kind of gun shy right now on the second trade. It's probably correct, because this looks like the second sell signal is a retrace signal, and and I held back. So there's always a little bit of art to everything you do, right? And as I said in the Loom video that I showed you guys, if you want the absolute best signals, the ones that sort of where you really don't think twice about it, you take the first label. You take the first label and then just ignore everything else. Speaking of the first label, here's a buy on MGC. Okay. I'm long this one. I'm a little bit. I'm late on this, and why? And look at this. Boom, boom, boom. Let me explain to you why I did this. And this is kind of like, we talked about this all the time. If I start explaining before I start trading, it's too late. So if I get a buy signal and I'm a little bit late to it, but the actual price is well below my possible entry, so like my entry would have been 55, but my entry here was 54.7, then absolutely I want to take it. I definitely, if I trust the fact that this should be a legit signal and I get a better price, yes, absolutely. If I'm late to the signal but at a better price, I will take it. If I am late to the signal but the price has already run away from me, no, I will not take it. So that's what I was trying to do. And you see, you snooze, you lose. Had I thought about it twice, I wouldn't have been able to make the trade. Now, as it turns out, this trade actually is probably kind of a crappy trade. This buy signal is sort of a false buy signal. But because I was in at the right time, sometimes, the right price, the right entry is better than the right setup. So in this particular case, the right entry was the better setup. But, you have all these minor permutations in all of this stuff that you learn the more you do it. The more you cook, the more you understand, the subtleties of what you do. The more you trade, the more you hit tennis, the more you hit golf. You understand there's a subtlety to every stroke, every putt, everything as you do. But the general principles are really very, very solid. So, by the way, speaking of general principles, 3 sell trades in a row. Let's say that 3 times fast. Then we have green. If we get red, green, we're going to go long here on NASDAQ. That's my next possible setup on the trades here. Is there a reason I don't trade currents? Because you can't trade FX on this particular setup. I trade, as you can see, the 1-minute chart, very, very focused trading, small, very defined targets with a highly leveraged instrument on a prop trading basis. And because I'm also trading a futures prop trading account, not a CFD prop trading account, on the future side, you really only have you can trade currencies, but nobody really does. On the future side, you only have access to the big products on the future side is indices, gold, and oil. That's what everybody trades. So that's the reason. Just my own prejudice is the answer. Can I provide the PDF for the indicator? No. Come join me. I already gave you the video showing you the all the rules. Come join me in our group, become a member. I'm happy to give you the indicator. Okay, what else? So V-shaped recovery. So it's not even like a double bottom recovery. Nice V-shaped recovery and NAS. Typical. Sell it and buy it. And by the way, so yes. So here's the thing. This buy 50 was my target. 55.6, 54. Yeah, I definitely would have been stopped out. Clearly would have been stopped out. So here's the question, right? You get stopped out on this buy. Remember, the second legitimate buy entry is on the next green zone. So you have a buy label. If you get a next green zone, it's a legitimate buy entry as well. So if I get, if this candle closes green, I'll go long. My point being is if I got stopped out on this first buy, I made money on this first buy, but if I got stopped out on this first buy and I got a chance to trade the second green entry, the follow-on entry, I would take it. It's a legitimate trade, right? Whether it works or not is immaterial. You know that over the long run, it's a high probability trade. But, just kind of letting you guys know. All right, I'm not going to take this right now because I don't want to focus on gold. I'm just kind of interested to see what else is going on here. You see how choppy it is. Today is a market where there's very, very little trend, very little continuity. And yet, because I'm not tilting, because I'm not taking bullshit trades, because I'm only taking the only trades that the indicator is giving me, I'm pretty much okay. I'm pretty much, doing okay. I'm P&Ling, which in a very, lackluster market is great. That's what scalping is all about. Scalping is the ability to trade any market, anytime, and have a reasonable expectation of profit. Whereas if you're trading swing, you'd have to have actual, trend moves. If you're trading trend, you absolutely have to have trend moves. Today is actually a great day to trade mean reversion. You sell tops, buy bottoms, which is great, except for when it becomes trend, and then it's the worst strategy ever. So that's why I love scalping, because scalping doesn't require you to have any specific market regime. You can try to make money within a trending regime or within a ranging regime, as long as you stick to your guns. That's why it's such a good strategy for passing the prop, right? If you're already the member, then you got the video, and then the PDF will be coming. It'll just take me a while to make it. You want just the basic stops and targets and the basic rule sets. You really want to make me work, huh? I fucking hate doing paperwork, right? You take if you think Kathy, who is the biggest nudge ever, can't get me to work. Do you think you're going to get me to work? No, I'm just kidding you. I'll make it a PDF, but it'll take a while. I love to trade. The last thing I want to do is make PDFs, my friend. But I'll do it for you. Oh! It wouldn't be live if it wasn't. That is a fire truck, big ass time. That's the fire truck saying, "Get the F out of my way, everybody. It's time to go." Yep. And look at this. We come right back to session highs. Those of you who like to trade session highs, this is obviously kind of interesting. It's coming right up here, right? Not my setup, but definitely legit trade to look at. Nothing showing up. Gold. Oh, gold has a green. Okay, we do have a green. What time is it? It's 26 seconds. All right, let's see if this green gold is working. It's going to work for me. All right. Nope, no greens. No greens. You see how many times I get myself prepared and the signal disappears. And that's the key thing. And I'm not jonesing for the trade, right? If the signal isn't there, I'm not taking it. And the signal is not there. So you have the little bullshit, little bullshit, little bullshit. Okay, fine. I'm not gonna, Oh, we have a buy signal in the S&P. That's much more interesting. Buy signal in S&P, 46 seconds left. That's my bread and butter trade. So let's watch that. Let's go back to the S&P. That's what we're going to focus on. Let's see if we can make this. If this turns into a trade possibility. And it doesn't. It's like a perpetual tease today, right? All right, we're long S&P because I was. Oh, look at that! Look at that! Swing it and hit it. You see that? In and out. And why was that? Because that gave us a buy signal at the session highs. They were just like, let's sweep the session highs. So I got, we got lucky on the session highs, but it was a legit buy signal. So, we took it. That was good. So honestly, like literally all winning trades today. Look at this. This was a, bullshit trade, but still a winning trade, right? So 2 in the S&Ps, right? 2 in the S&Ps. This is during live. Gold goes over here, 1 here, 1 here. So that's 4, right? 4 in gold. So 2 in the S&Ps, 2 in gold, and then we took this one. I did take this one, so that was legit. So 2, 2. So that's 6 and a bagel, which is great, because we want to be, 7-1. 8-1 would be perfect. Those are all good numbers. That's where I want to be. So we're 6-0 today on all of our winning trades, and that's how that's how you scalp. Hope you guys really enjoyed that. I got to run, guys, because I got meetings coming up. But hopefully you guys all really enjoyed it. Any final questions? Anything else on your mind? I see 20% of you do not have trading view. If you want to come trade, get that account. My God, trading view should just pay me money for humping this. But no, seriously, you want the indicator, you want everything else, just get the trading view. I'll be happy. There's a lot more indicators than this. There's my automated trading strategy, the ODP strategy, that is also on this indicator, which is bomb ass. It is the best strategy ever. Let's actually see. Let me actually see if it has traded anything on the indices yet. Let me see. Yeah, look at that. It just made another. So let me show this to you. This is my automated strategy. Again, come join me Saturday or come register because this is going to be a really cool webinar. So this is the US 30. See, remember I told you the robot does everything. The US 30. $200 to the good. We're good to go. We're done. All right. So that worked really well too. So I just have NASDAQ to finish up. Anyways, thank you guys. Everybody have a wonderful day. Thank you. Good start to the week. Nice Monday, 6-0 on our trades. Everybody, one last chance. Apex, I think, is the final day for their discounts. So be sure to get their discounts. Come join us if you want. Here's the 1-month link, and here's the 3-month, coaching links. Thank you again. What else do I want to give you? I give you everything. Oh, and here is the free prop trading guide. No, sorry. I'm sending the wrong link here. Hold on. PRP. Here's the prop trading guide. This is a free guide if you guys want the prop trading guide. Thank you so much, guys. Hope everything now is a lot cleaner, more visual, and more logical for all of us to trade. I'll see you guys tomorrow. Sorry. One last thing. Yes, tomorrow, Wednesday, we're trading. Thursday, we're not because it's a Jewish New Year, so I'll be gone for Thursday. I'll post all the links very soon on YouTube Live. So tomorrow and Wednesday, we're going to be doing live, 9:15 to 11, as always. Everybody have a wonderful, great day. I'll see you guys later. Bye-bye.